Welcome back. Ed Ponsi here on behalf of FX Street. Once again, welcome back. Hey, great to be back. Time for our second session. Now, during the first session, if you were here with us, or if you didn't, please catch it in the archives. It's available. We did a setup on Dollar Canada, and it's an hourly RSI setup. And the entry is supposed to be approximately 132.80. But here's the catch. There's no buy signal. The entry's never triggered. Why? We needed RSI close above 30. And you can see RSI is at 25. So the entry hasn't happened yet. And not only that, but the stop of 132.40 was based on the low of this green candle. The low of that candle was 132.44. So not only did we not get an entry, but a lower low occurred. So now the stop has to be lower. And the entry may also be lower. So what would the stop now be? Let me just move this down a little bit. The stop would now be, if you look at the low, it's 132.30. So the stop would have to, that the low of this red candle, the lowest point reached on that red candle is 132.30. So we cannot have our stop above 132.30. So I'm going to put our stop under 132.30. So what do you think might be a good location for that stop? That stop has to be under 132.30. What might be a good location? Something under 132.30. Now that doesn't. Look at the current price right now. The current price is 132.43. So RSI is 26 right now. We need the RSI to close above 30. When does this candle close? Right now it's 12 after the hour. So the candle closes in about 48 minutes. And if it closes with the RSI above 30, then we can go ahead and buy. But that buy price might be lower than 80 now. It might be, so I'm just guessing. We don't know. There's no way to know what that price is going to be, but it might be, 65. So we might get with a lower entry and a lower stop. The price is lower now, right? A lower entry and a lower stop, but with the same target. Means better risk reward. This is why we don't just enter. This is why we wait for the candle to close. Now, during the previous session, RSI was above 30 while we were discussing this trade. But it didn't close above 30. Huge difference. That's why we wait. That's why we didn't just dive in. And do you see how we avoided a huge mistake and a losing trade because we were patient? There's definitely a lesson in here. So I'm guessing the entry is going to be around 132.65, but the truth is I don't know. Because there's no way of knowing what the price is going to be when the candle closes. Right? And that candle is going to close at exactly 10 o'clock New York time, my time. Right now it's 9:14. But no matter where you are, it's going to be 46 minutes from now. That candle's going to close. Make sense? Okay. So it's kind of a big deal to understand that and to wait for that candle to close. It'll filter out a lot of bad trades. It'll filter out a lot of bad entries. Being patient, waiting for that moment to come, definitely will help. By the way, if I do this trade, we didn't mention this earlier, but I rarely do any trades with one target. This is now beginning to set up as potentially being close to 4-to-1. And frankly, this could continue to drop. If it continues to drop, we could end up with an even lower entry and a lower stop. But this target's going to remain about the same. There could be additional targets as well. But the farther this price drops, the better my risk reward gets on this far away target. But there are other targets that could be used. There's a little bit of resistance in this area here. This could also be a target right here. And I could see that becoming a secondary target, perhaps near one, maybe just under 133 might become a target. So maybe I have an easy target and a hard target. Now, I could put that target right on 133, and that would be approximately 1-to-1. Let's try that again. Let's make that blue because it's a target. And again, I say approximately. It could end up being better than 1-to-1. We don't know what the exact entry is going to be because, again, we do not know. But you can see there's some resistance in here. And even if there was not some resistance in there, 1-to-1 target is not a bad thing to do. You can take some minor profit and you can move the stop up to the break-even point, and then you're playing with house money to try to get the rest of the way to that second target. So it'll be interesting to see what happens. Unfortunately, this session will end before the top of the hour, so we will be able to be with you to see if the entry occurs during this session. We'll be back with you on Thursday. And then at that point, we'll be able to go over this and review it and see if it worked out or not. So be sure to join us on Thursday to see how this works out. Now, here's the caveat. If the entry does not occur, and if this price makes a lower low, which is very possible, what happens? We can end up with an even lower entry and an even lower stop, which is very possible. So we're all going to put the stop low point. So right now the low point is 30. That's why our stop is 25. Let's say this candle makes a low of 20. That's going to make our stop 15. Let's say this candle makes a low of 15. That's going to make our stop 10. Our stop is always going to be under the low point. But it also means that that means that whenever this turns up and creates a buy signal, it's probably going to be a lower entry point. And it's definitely going to be a lower stop. It's probably going to be a lower entry point too. The entry point, as I said before, tougher to predict. Okay? All right, so we'll leave that be for now. Let's get over to a few other charts here. So that's dollar Canada. Very fascinating stuff on dollar Canada. Let's get over to stocks, which are very interesting. Controls the yen. Here on the daily, you can see a high wave candle here. Doji, these are candles of indecision, both of them. And yesterday, please don't call that a hanging man or a hammer. That's a tiny little thing. It doesn't mean much. All right? And so really, this is all indecision to me. But it's rotation. Money's coming out of certain sectors and into others. Take a look at the beating that some of these stocks are getting. There's Apple. Apple was looking very bullish. It had the ascending triangle within the uptrend, and it just got hammered. Let me get rid of the RSI. Well, I'll leave it up. Here you go. Google. Beaten. But look how overbought it was. It needed to get a beating. Facebook. Beaten down. Amazon. Look how overbought this thing was. Beaten down now. These stocks needed to get beat down. Look how overbought Adobe was. Adobe was overbought for months, now beaten down a little bit. These stocks needed to be cooled off. That's why I'm showing you that, leaving that RSI up there. CRM, look at all the overbought signals up here. Needed to get a beat down. All right? So this is probably a good thing for some of these stocks, but you're seeing the high-flying stocks are getting beat down, but the market's not getting beat down. The money is flowing into other areas. So the market's not going down. People are just taking money out of these names and putting it into financial stocks, energy stocks. I don't think it's going to last. I don't think the rotation lasts into energies and financials. Energy doesn't make sense. Here's XLE, which has just been brutal. Just remember that the entire time this was going down, the stock market was making new highs. And then suddenly everybody loves it, and big green candle and big gap up. Guess what? It's not going to last. This trend will remain intact, I believe. That downtrend still hasn't been broken. But even if it is broken, there's no logical reason to break the downtrend. Okay? 2 reasons why. See, oil, I just don't see oil rallying. Earlier this week, the EIA, Energy Information Association in the U.S., declared the U.S. is going to hit 10 million barrels per day next year in production. 10 million per day. It's a new record. The U.S., the most the U.S. ever was 9.6 million per day, and that was back in 1970 when they were just, drilling anywhere and everywhere and just going wild. And now, they're going to hit 10 million per day. So it doesn't matter how much OPEC cuts back. Excuse me. It doesn't matter how much OPEC cuts back, and there's nothing they can do. And now you have Qatar, however you want to pronounce it, is probably going to violate their production agreements, and that's going to probably cascade. So, it's really hard to see how the price of oil goes up with all this in production increases in the U.S. and in other parts of the world, and OPEC is trying to hold prices. Is trying to hold prices up, but I don't think it's going to work. So why should we rotate into these stocks? answer is it'll rotate into the stock for a couple of days, and then people will realize it doesn't make sense. And when people realize it doesn't make sense, the money's going to go back into Google and Amazon, because they're going to realize these stocks aren't really going anywhere. The same with the financial stocks. Financials form this head and shoulders. There it is, right? There's your big head and shoulders. Excuse me. There's your big head and shoulders, right? And it's gigantically, money began to flow into the financials. But guess what? The financials, there's no logical reason for money to flow this way. I mean, you could say higher interest rates are good for the financials and the Fed is going to raise interest rates. True, but the market is lowering interest rates. Right? When you see treasuries moving up, like this, that means interest rates are actually moving down. The Fed can't control all interest rates. This is the 10-year. The price is moving up, therefore the rate is moving down. And right now, the rate is at its lowest point this year, 2.2%. That's the lowest it's been all year. Bad news for banks. So banks are going to go up for a little bit until people realize it doesn't make any sense. And they're going to say, hey, that Apple is down. Maybe I should buy it. Or Google, excuse me, or Amazon, or Facebook, or Adobe. This is what I think is going to happen. I don't know for sure. And the truth is, the Fed has a lot to do with it. We have the Fed meeting tomorrow, and this is a huge deal, right? The Fed meets tomorrow, and we know that the Fed is expected to raise rates tomorrow from 1% to 1.25%. Now, the job creation in the U.S. has not been that great. It hasn't been great for years. And the only reason why the unemployment rate is as low as it is because many, many people have simply dropped out of the workforce. And that's the reason why the unemployment rate is as low as it is. So, in other words, the economy is not that great. It's just, we're not exactly flying along here. So I don't think the Fed might raise rates, but the Fed, whatever the Fed does tomorrow, could have a big impact on the stock market. Fed raising rates generally is bad for stocks. And what currency pair would that affect the most? Dollar yen. Now, we are out of this trade. Last week we had Super Thursday, you might recall. We had already hit our first two targets. And then we had one day where we had an election in the UK, and we had testimony from the former head of the FBI in the US. And there was another thing going on. I forget. There were three huge things happening at once. And I said, you know what? I'm closing them. I'm taking my 400 pips and I'm going home. So I closed this trade out. But so we never made it to the third target. We weren't stopped out. We just said there's too much event risk, and we're up 400 pips on the trade. Why should I risk all of this just to get another 100 pips to make it to the third target? Let's just close it out. So we did. We closed it out, but you never know. There could be another trade in here somewhere. See, if the Fed is raising rates, it's very bad for stocks, and that means dollar yen could launch again. But we would need to have a whole different setup. I would want to see a rally first. I would want to see a rally first, and to create a new setup. One that really could be interesting would be pound yen. The pound is definitely weakened by all the Brexit situation going on and all the mayhem since last week's election. Politics in the UK, fascinating, right? So we have a coalition perhaps happening in the Sorry about that. We have a coalition perhaps happening in the UK, but Theresa May very weakened, and we don't really know who's going to be the next prime minister. We don't know if May is going to stay in. We don't know what's going to happen in the UK. But the pound has been weakened by all this, and the yen could strengthen a great deal if the Fed gets involved here and starts raising interest rates again. So I think pound yen could be the answer. I'd like to short it, but I'd like to short it higher up. We certainly have a downtrend here, don't we? According to this, we want to short it a little bit higher, don't we? Around here, around 141, 142. We're currently at 140, so we want to see this come up another 100 pips or so. And if that happens, then we can get short, because this could be a very interesting ride. Pound got below our key area, which was 127.75. You see it dropped hard, got under there, and now we're bearish. Under that red line, we become bearish. Above that red line, we're bullish. So now we're in a bearish area. I think Carlos was bearish above it, so he probably did very well on that. Yeah, I'm now that's sort of my line of bearishness. Now underneath that line, I become bearish. So any rallies I want to sell up to there, but I really want to sell pound yen more so. When I see a downtrend like this, I'm interested in looking at moving averages. There's the 10. I don't really see a lot of resistance on the 10. Check out the 20 perhaps. So we're getting into a situation now where the yen could become very strong, because U.S. stocks are very exposed here, let's say. A little bit of resistance on the 20 here for Euro yen. Nothing on Aussie yen, because Aussie's still strong. There's a little bit on the 20 for dollar yen too. So dollar yen becomes a possibility again if it comes up to, say, 110.50. You can see it poked here, around 110.75, excuse me, 110.75. I might want to re-engage a short on dollar yen. Dollar, was very weak for quite a while, and really showed a little bit of strength here, but nothing that I'm not really terribly impressed with it. A couple of days worth of strength, but it's nothing. I'm not terribly concerned about that. I don't mind shorting dollar yen again if I can see some strength in dollar yen. I think 110.75 might not be a bad place to do it, right? That might not be a bad place to get short. Okay, so Anyway, we know that we have the Fed tomorrow, the Federal Reserve. That meeting has already started, by the way. It's a 2-day meeting. So it starts today and it ends tomorrow. So as far as other stuff to keep an eye out, we already had the producer price index stuff today. Showed a little bit of inflation, which is what the Fed is worried about. Of course, it's growth. The Fed doesn't really talk about growth. They really are talking about inflation. Growth is what I would be more concerned about. We get a lot of data out of China tonight. For all of you folks that are trading Australian dollar, you might want to keep an eye on this. A lot of data out of China tonight. Industrial production is definitely a big deal. Industrial production, right? Because China's economy, right? What's very important? Exports are very important, and most of China's exports are produced in factories, so industrial production would be very important for China's economy. We're going to get CPI out of Germany tomorrow morning. We're going to get claimant count, that's like jobless claims, out of Great Britain. All right. And moving on down the line, retail sales out of the U.S. tomorrow could definitely be a market mover. It'll be interesting. And CPI and retail sales at the same time. I really wish they would not release these at the same time. Because how are you going to gauge how the market reacts to retail sales if you're putting out CPI at the exact same time? The answer is you can't. You cannot gauge a reaction of either if they're being released simultaneously. It doesn't make sense to put them out at the same time. And they're coming out on the same day as the Fed. So market's likely to be a little bit thin. That means the reactions could be more dramatic in a thin market. So, you could see extra volatility. Okay. Crude oil inventories tomorrow also for my Canadian dollar traders. That could be interesting. Of course, everyone's going to have their eye on the FOMC tomorrow. That's coming in the afternoon in the U.S., so it's about 30 hours from now. About 30 hours from now. Okay, and that's, of course, going to be the big one. That's the one I would tell you, do be careful, because Fed meetings and are now create more volatility than non-farm payrolls. 10 years ago, the market cared more about economic data, and non-farm payroll could move the market, 200 pips, 300 pips. I haven't seen that happen in a long time. These days, non-farm payroll is, it's going to move the market 50 or 60 pips. But the one thing that can move the market 200, 300 pips is a Fed meeting or an ECB meeting. And so we've got a Fed meeting tomorrow. So do be on your toes. Okay, gang? Do not be caught unaware. Don't be sitting there placing a trade 30 minutes before a Fed meeting. Always check your FX Street calendar every day. Never get caught by surprise. Okay? All right, gang. That's going to do it for me. And I'll see you on Thursday. And on Thursday, we will go over the meeting and the aftermath. We'll see if there are any trades that we could place in the aftermath of that Fed meeting. There's dollar Canada still dropping. It's really at the bottom. It's right at the bottom of this bull channel now as we speak. All right, gang. I'm out of here. I'll see you on Thursday. Everybody have a wonderful day. Thank you for listening.